For this video, I'd like to review the two chart pattern trades I took on SPY yesterday, on Thursday, for profits. So let's get right into it. The first one here is going to be a rising wedge chart pattern on SPY's 1 minute chart. All right, and we were able to capture a 40% return for $270. So my position size on this one was about $600. We took 10 contracts, on-day expirations, typically always trade on days and right at the money, or just cut one price out of the money. So what we're looking at here was we had these two trend lines, the higher highs and the higher lows, and it was getting narrower, forming a rising wedge chart pattern. All right, and it was approaching the 200 EMA, rejecting at the 200 EMA, and we had these two rejections here that formed a resistance level. So we're rejecting at the resistance level, we're rejecting at the 200 EMA, we're forming a bearish chart pattern, and then let's also take a look down here at the indicators. While all of those bearish things were happening, the indicators were giving us bearish sentiment as well. So this is all confluence, all these things agreeing with one another to give you confidence to take a short position here. The RSI was up in the overbought range, close to that 70 level. The blue was above the orange and starting to round out to set up for a sell signal MACD cross that did take place. And it took place here in the upper zone. You want to see the sell signal crosses in the upper zone and the buy signal crosses down here in the lower zone. That's your highest probability. All right, and then the TTM squeeze, we had buying momentum for a period, but then we were starting to round out. We got these dark blue bars indicating buying momentum leaving the market. So all three indicators are agreeing that the price should come down, while the chart is rejecting at resistance levels, rejecting at an EMA, and forming a bearish chart pattern. A plus setup was able to catch a break here. On the break and retest of the chart pattern, and I caught a move all the way down here. My reasons for exiting, I would have loved to have caught a move all the way down to the bottom to this demand zone we had in this gray boxed area. And it's the bottom of the chart pattern. Typically, we can see a move back to that level. However, if you look here on the left-hand side where these arrows are, sharp bounce here, a lot of wick touches in here, briefly fell below and then reclaimed and went up. So this was a important level to keep an eye on. And as we approached it, we get this reversal. I didn't want this to reverse all the way back up and lose all my profits. So I got out here for 40% return. All right, that was the first trade of the day. And now let's look at the second chart pattern I took. All right, that last one was on the 1 minute chart. This is SPY now on the 3 minute chart. And you can still kind of see the rising wedge here on the 3 minute chart, but not as clear. It was definitely a 1 minute chart setup. So what we have here now is those rejections again. All right, so here's the rejection that I took the first time. And we had these over here on the 1 minute chart. This was the resistance level. So then we form it again and a third time. And now we're rejecting near the 200 EMA on the 3 minute chart now as well. So rejecting at the 200 EMA, we have a triple top chart pattern form. Looking for price to reject here and come back down to demand again, or even this level here. Well, I missed the first push down, so I entered at that level. I knew if we could break structure here, the next stop was down in this demand zone. So I entered. We got a nice 3-bar play, red, green, and then here's this 3-bar play down. And then I held and was able to capture and move all the way back to the low of day down in this demand zone. And I used the same contracts here. So this was another $250 trade, this time a 50% return, so a little bit smaller position size, used $500 on that trade. And then I had one other loss on SPY that day. So let's look at the indicators. Bearish chart pattern, rejecting at the 200 EMA. What was the indicators telling us? Got that sell signal MACD cross again. The RSI wasn't all the way up in the overbought range, but we had room to fill down to oversold, so that's a good indicator. I wouldn't have taken this setup if the RSI was, let's say, here, almost down at the overbought range. But on my entry, we were here above the 50 level, so plenty of room to move that down to 30, where we're considered oversold. So caught the move with that, and then the TTM was showing us buying momentum leaving the market again, selling momentum stepped in for a brief time. So again, all indicators, bearish sentiment, chart, bearish sentiment, that was an A plus setup. So that's how I used two different chart patterns on SPY on two different time frames to capture profits yesterday. Hope this was helpful. Look for these strategies and patterns in the future, and let's make some money together.